Hi, I'm Daniel, and you're watching Unrivaled Investing. On this channel, we're looking for potential multi-baggers, the types of stocks that can go up hundreds or even thousands of percent over time. That often requires turning over rocks, looking at new ideas. In this case, today we're looking at the IPO of ServiceTitan. And what does it mean? What's the business do? How do they label themselves? What's the opportunity? And what do I think about this share price currently, the valuation? As always, if you enjoy educational investment content, please make a point of hitting that thumbs up. Hit that subscribe button. Let's dive right in. So ServiceTitan, TTAN is the ticker. Originally priced around $60, then it opened around $70, quickly popped to over $100. You're getting a classic IPO structure where you're getting this nice pop, limited supply, lots of demand. That's what you're seeing right now. So what do you describe them? What do they even do? So they label themselves as the operating system that powers the trade. So think about the hardworking people in the flooring, landscaping, windows, roofing, air ducts, electrical, janitorial, fire safety, elevators. You know, you're talking about the folks that get stuff done, and they're saying we need modern day solutions for customer relationship management or working with our employees, the HCM or human capital management. So the way I personally think about this is that you have a Salesforce, you have a Workday, and they target some of these mega companies. But if you have, let's say, a small mom and pop shop or even a regional player that's providing janitorial or plumbing services or landscaping services, you still need the best solutions out there unless you want to deal with the headaches of, dealing with, let's say, manual invoices and things like that. So this is their suite of solutions that you're looking at. It addresses a lot of the pain points that these small, hardworking, individual trade businesses are dealing with. And so then, looking at it here, let me minimize myself. You see it's generating leads. So it can be very active. How do I want to spend my sales for marketing, booking the job, sending someone to get the job done, taking payment, and then being able to reconcile all that. This is a valuable service that previously, created real headaches for thousands of merchants. And now they target over 10 different niches, 10 different trades, customers of all sizes, but really think of it as small family-owned shops to the regional player that, let's say, has $1 billion in annual gross transaction volume. And looking at the customer referrals broadly, it just seems great. I might not expect that in an IPO, but they talk about really how it's critical, how it's the operating system for their business. They didn't even know what was possible until they used it. They talk about how previously they were using handwritten notes, QuickBooks, Google Calendar, and effectively paper to get it done, and putting it all on ServiceTitan made the difference. And another example is, an AC company, a regional AC company with $60 million in revenue, talking about how, look, I believe in ServiceTitan, I'll preach it all day long. Another, Cool Ray. Once again, it's not a national brand. It's a small or regional business focusing on cooling, heating, plumbing, electrical, talk about how they were able to grow significantly once they started using ServiceTitan. So when you see these types of customer tutorials, you're thinking about they're providing a critical service for these businesses, for these trade businesses. And the business was founded by Ara Madessian and Vahe Kuzoyan. Apologies if I massacred the names, but what you're talking about are two Armenians. They are the sons of trade business owners. And so they grew up watching their parents work late into the night after full days in the field and balancing the books, preparing invoices, and scheduling the next day's work. So they saw this, they saw the old technology that they were using, the pen and paper approach, and they said, this doesn't make sense. We can work on this together and build something that's more modern and really help the thousands, millions of merchants out there. So right now it's US focused, thousands of merchants, $685 million in revenue on their platform, 24% revenue growth. Those are very solid, good figures. They talk about solid customer retention figures of gross dollar retention of 95%. So that means their software solutions are sticky. Yes, you are going to see some churn because of the customer base that they have naturally. If you're going to have smaller businesses, small mom and pop shops, those naturally, you're going to have a higher churn rate than, let's say, something dealing with the $1 billion plus type of business. So it is important to, understand that dynamic. But for the companies that they keep, they're generally spending more money with them with a 110% net dollar retention, layering in new products, new modules that go with ServiceTitan. So you see sizable revenue, significant dollars going across their platform, $62 billion across their platform. That also is growing over 20%. So broadly, I like what I see. The opportunity that they're targeting, they're saying, look, the end customers spend around $1.5 trillion on different trades in North America on an annual basis. So 1.5 trillion on trades versus the 60 billion plus that's currently going through their platform, and they're only capturing around 1% of that. So that goes back to, this slide, 60 billion in the transactions going across their platform. They're capturing roughly 1% of that. So their view is, look, we can, we're tapping into 1.5 trillion that's being spent. That number, the gross transaction volume, can easily increase. And by the way, based on the products we currently have and our full suite of products, we think we can effectively double that take rate from 1% of the transaction volume to 2% over time. So I see multiple growth drivers for this bump, for this company. Wouldn't surprise me if you have years of solid growth ahead. When you look at the revenue, it's worthwhile to understand there's a couple of different pieces here. The majority, around 75%, or a little less than 75%, it comes from their subscription business, where you see that it's, the software piece, the recurring revenue piece. This is the fat margin. This is how you get the very attractive free cash flows that you'd want to see with this type of business, the subscription. But they also do have usages, which is reflecting the payment transactions and financing services, as well as professional services and other, which reflects the onboarding and more one-time fees. So that type of revenue is lower quality, could even be, break even or negative margin. The usage, that'll be more volatile with the actual economy, and subscription, that's going to be steady Eddie, because it's, recurring revenue, very highly valued type of setup to understand the different pieces here. And so what are my thoughts on ServiceTitan? First, as always, this is not financial advice. Also, quick plug, recently, Michael, a premium member of the Unrivaled Investing community, wrote, this is a direct quote, "So far, the subscription has paid for itself in 3 months. Looking forward to what the future holds." So if you're looking for compelling ideas, come check out Unrivaled Investing. I share my personal journey in a weekly letter, also have a monthly exclusive video. Thinking about ServiceTitan, where do they go ahead? Not only do they have a sizable market that they're tapping into and clearly, upgrading the experience for these hardworking, merchants and businesses. The way I think about it, and that they should be able to continue to take share, is that as they continue to grow, they're investing, increasing their value proposition, adding more services, getting more incremental data from these different merchants, from these different trades, businesses. Then they can think, okay, what do we need to add to our platform? So I do like the flywheel that they're seeing, adding more core modules, maybe even exploring different verticals to say, hey, how do we get this growth? So I do see this as a grower over time. If you were to see their growth rate drop from, let's say, 20% plus to, sub 10%, I would say it might be worthwhile to revisit the thesis and say, did something break? Because that could happen perhaps in a recession type of scenario. But if not, then I would expect them to be able to deliver solid growth for years to come, especially given the sizable market that they're addressing, and that they are solving a pain point that, let's say, the sales forces of the world, they're really not addressing for these, much smaller players. It's a niche solution that should be valuable for these trade businesses. And so I look at this and I think this flywheel can go on for some time. I also do like to see that the founders will still control the business after this IPO with over 60% of the voting power. And I look at the business now, it's still growing, low 20s%, around 23%. A little surprising that they haven't updated their October figures. They provided sort of a range of, I think, 197 million to 200 million, something like that. And so it was a little surprising to see that we're not talking about October figures yet, but still first half of 2025, because their calendar year ends, their fiscal year doesn't quite exactly line up with their calendar. But looking at this, 23% growth, 60% profit margins, sizably huge losses though. So that is worth understanding that they're still investing a lot in terms of the sales and marketing, developing new products, and general and admin. That general and admin expense does make me wonder if, this company really is as lean as it could be, or is it about, rewarding the owners and the people in the company. That it just does seem like quite a bit. So I wonder if a more leanly, conservatively run business would already be at a profitable, state. So as I look at this, because that's a sizable loss that they're still operating at. So looking at the stock price around $100, you're talking about over $8 billion market cap for a company that maybe does around $750 million in revenue this year. So, growing at, let's say 23%. So I look at that and, so you're saying over 10 times sales for 20 something percent growth and, hugely unprofitable. That just doesn't scream out to me as very attractive. I mean, let me be super honest. Within the last few weeks, I was buying a med tech company that was growing closer to 35% and trading under 5 times sales and has a better gross margin profile. So to have something that's half of the valuation with better growth, I think frankly that it's not worthwhile to chase this. I think, look, a lot of investing is just turning over rocks, learning about new ideas. So I'm excited to learn about ServiceTitan, but truthfully, given this sort of profile, even assuming 20% growth and a 30 times earnings multiple and let's say 25% margins in the years ahead, they're nowhere near that now. It still wouldn't yield a really attractive return. So frankly, I would need to see the share price closer to $50 versus $100, even to sort of get me interested. Now, keep in mind, this is a hypothetical framework. Of course, stock price can go way higher, way lower, but I do like to understand what's going on, with business, what's going on with the IPOs, what's sort of coming into the market, how, what's sort of the valuation range that investors are thinking about for, a newly listed company. And so this does help me actually re-underwrite some of the investments I've already made, where I'm thinking, man, this is growing faster, has a clear, more obvious runway for growth, and it trades at less than half the valuation. So that makes me feel more comfortable with my investment. So maybe I need to, double down or increase my stake. So it is helpful to think about. I think ServiceTitan is an interesting company. And where does it go in the years ahead? I think you have the fundamentals continue to grow. At least that's what I expect. They didn't have a multi-year history of the actual, so I would have preferred to have a little bit more data. You only had, let's say, the last, 2.5 years. But looking at that, my expectations would be the fundamentals keep growing, but that doesn't necessarily mean the stock price goes up with that. As a lot of investors know from the last few years, you get volatility. And that volatility is because there are 3 drivers of your share price returns. You have the fundamentals. That's going to drive most of your return over a multi-decade perspective. But let's say over 5-10 years, you can also have valuation fluctuating a lot. And so it wouldn't surprise me if you have the fundamentals for something like ServiceTitan, if they execute really well, get to that 25% profit margins, get to 20% annualized growth, but offset by valuation going from, let's say, 11 times sales to 3-4 times sales would not surprise me at all. If you saw that in the years ahead, in which case stock doesn't really go anywhere, or it's a really, sort of bumpy ride. So I'm not chasing ServiceTitan, but I'm glad that I know about it. I hope this video has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. And if you have, let's say, a compelling idea where you're saying, Daniel, this fits your criteria that you're looking for. It has the significant insider ownership. It has obvious growth potential, and it trades at a reasonable multiple, maybe under 4 times sales, or trades at, let's say, 15 times free cash flow, something like that. If you have an idea like that, would love to read it in the comments below. Thanks so much for watching Unrivaled Investing.